Hi, everyone. Today's Real Vision Daily Briefing is sponsored by Crane Shares. Learn about their KCCA ETF at craneshares.com/KCCA/Real Vision. Now to the top analysis of today's markets. Is it time to throw in the recession towel? Hi, everyone. Welcome to the Real Vision Daily Briefing. Just in time with me is Tony Greer, editor of the Morning Navigator newsletter. Hi, Tony. You had some company, so you had to go clear the decks, huh?
Yeah. My dog wanted to be involved. Beckham wanted to be involved with the Real Vision Daily Briefing today, but
He
we just
certainly
sorted
did.
that out. Thank you. How you doing today, Maggie?
I'm doing well. I'm doing well. So, our question that we started with is a riff on your tweet from earlier today. So, what do you think? Is it time to give up those recession calls after that hotter than expected retail sales reading? It certainly seemed to take people by surprise.
Yeah, well, it took the bond market a bit by surprise. I think you can tell by the reaction. But let's talk about the economic side first. We got hotter CPI, hotter PPI than expected last week. Today we got better retail sales, better ex autos and gas, better than expected industrial production, better than expected capacity utilization at almost 80%. I mean, the recession bros are getting hit with so many rights, they're begging for a left at this point, right? So they're going to have to adjust that idea because there's just not manifestation on the tape. And then we have the bond market come and tell us that the sell off isn't just over just yet, right? We have a 2 sigma spill in 10-year futures. 10-year yield spiked from 458 on the close 2 sessions ago to a peak of almost 5.25 today,
Oof.
right? Which is right, which is a reversal of that flight to safety that we saw at the beginning of the Middle Eastern conflict. We actually saw an outside reversal in yields higher, and that's the move that's still going. So what happened today was even more interesting. We've got the rates flying, but we've got the dollar trading back off because that's also a reversal of the flight to safety trade.
Mm.
With the dollar trading off, we had some Aussie strength, Aussie yen strength, great tailwind for the commodity sector. All the natural resources sectors perk up today. On the top of the leaderboard, we've got metals and mining, oil services, uranium, solar, gold miners, all the crapola from, that's on down on the year, essentially, aside from oil services, I suppose. Cannabis up 5%, beautiful bounce off of moving averages. And the downside is all the rate sensitive stuff. Big tech is on the downside. We had the semiconductors trading off 1% with the new export rule headline, a 2.5 sigma, 4% sell off in NVIDIA. So, it was an interesting rotation day. Natural resources on top, rate sensitive tech, selling off, and the S&P is kind of dealing with it just fine, settling right around 4,400 again, with largely negative sentiment and the fear and greed index leaning in the fear sector around 34, 35 still. So there's a lot of reasons to kind of take the trades that you're given. You can remain bullish on the S&P. If you ask me, I don't think we're in danger of a breakdown, and the recession idea, in my opinion, is out the window, Maggie.
Yeah. So that's really interesting, Tony, because I think some people were looking at those yields and it's been staggering. We've seen this over and over, right? Everyone gets ahead thinking that that turn's coming and then they get blown out and yields move higher again. These are big moves in a short amount of time for bonds.
Everything is rate of change in the markets, right? So that's why you're finally seeing, the sector that's become religion, AI, NVIDIA, finally succumb to a sell-off today. What did it take? It took a 2 sigma spill in the 10-year futures, right? It took a real move higher in yields, but they are still rate sensitive. Um, it's going to be interesting to see how the yield um, move trajectory pans out, right? If it stays this steep and we see another lurch higher, you can probably expect a steeper rotation like we're seeing today. And, if they manage to sort of consolidate and not make a new high in yield, so, kind of maybe giving us an indication that this is a good level to buy bonds for a little bit of a trade, that'll be really interesting because that's still, something that could happen. We could kind of have a double bottom here in bonds and kind of a double top in rates, and then move lower in yields and higher in bonds. So it's been yet to be determined. And I'm literally on the edge of my seat waiting to see how it pans out.
Some people were looking at that big move up in yields And, sometimes when you see that, you see the stock market sell off. You saw that, but then you've had this sort of, mixed close. It did come back a little bit. I guess it's because of that rotation that you're talking about, because although tech got hit, you saw people moving into other areas. And when you're talking about cannabis, I mean, talk about some beat up names that we haven't even bothered to discuss here because they were so dead in the water. In fact,
Yeah,
that's a sentiment. We haven't even been asked about cannabis in the questions or the chats in a long time because everybody seems to have given up on that.
people have headline exhaustion in cannabis, right? We're waiting for safe banking, where they're listening to the saga going on in the Senate and the stories that go back and forth. And it's at this point not worth listening to until safe banking is actually passed and they have access to capital. And then there'll be mutual funds trading in the names, and it'll be a whole different animal. But until then, we can trip over our beard waiting for that to happen, as we know. So we focus on what's strong today, metals and mining, uranium, gold miners, retail, a big bounce back with the retail sales number after everybody just got washed out of retail in
Mhm.
the last several weeks. So that's an interesting trade that's kind of lined up for me. Large sigma, large magnitude move lower, move higher in stocks like Whirlpool, Bank of America. So there was some good and bad on the street today. It was a little back and forth. The S&P is still really comfortably within this kind of 4,350, 4,500 range. But it's a lot. I think the S&P is a little bit more resilient than people want to give it credit for. Is my opinion. I think a little bit of that has to do with the fact that we're not spilling into a recession. We just have this inflation issue right now. So we're
Yeah.
going to see how the bond market takes us forward.
Yeah. I mean, the bond market has been driving. So Paul asking an interesting question. Uh, Sorry, not Paul. I'll get to yours in a minute, Paul. AJ asking a question. Do you think the strong economy means a sell off in equities? It would appear not necessarily based on what we saw today, but
The way that I think about that is the way economic data relates to rates, relates to the stock market, that kind of triad there. If yields are kind of forcibly rising now because inflation is really, really sticky and isn't going away and starting to kind of chooch higher, yields are going higher. If the economic data remains firm, the stock market can bear it, right? If yields are ticking higher and data is going into the shitter, and I know that we've got a lot of crazy debt and credit limit data out there that's definitely catching my eye. But in terms of the economic data, in terms of sort of manufacturing and gasoline demand and things like that,
mm,
there's no slowdown to be had. I was just in Las Vegas and I couldn't have gotten a breakfast table at a black to play blackjack at Planet Hollywood at 10 o'clock in the morning if I wanted to. Like that's how crowded like the world is. So I'm just saying, like, not the entire world thinks that we're heading into recession. There's bull markets and economic booms everywhere.
yeah.
So that's how I look at that. That's really important, that if rates are going to go higher, it needs strong economic data for the stock market to bear it. And I think that's a fair way to looking at it that will keep you out of trouble for the most part.
Yeah. How was the concert at the Sphere? You went to see you too, right?
It's next level, Maggie. It's next level for rock and roll fans. I mean, that it's clear from the moment that you walk into the place that you're in a venue that was built specifically for concert production.
Yeah.
You don't feel in any way like you're in a sports arena or anything like that. It feels more like walking into a planetarium, and the
Yep.
effects are as spectacular in person.
Oh,
Really
cool.
are.
That's good to hear. Yeah, I know a lot of people are making the trek out. It's gonna be really interesting to presumably we're gonna see more of them pop up.
Yeah.
Um, it's
Everyone's putting it on their bucket list as word goes
Yeah.
around. And now that a trip to Vegas comes with a potential NHL hockey game, an NFL football game, a formula race if you time it right. I mean, the place is booming like I've never seen it before. It's really exhilarating, and I love that town more than anything.
Yeah, that's amazing. I wonder if some urban developers who are looking at some cities that are hurting right now are going to think about roping some of that in because it's all about experience. And if you can
Shoot.
bring people with that kind of Mayor Adams, if you're listening,
Yeah, right. Oh, one is being built in New York. I think that's in the
is it?
plans of Sphere. Sphere Entertainment is a publicly traded stock.
There you go.
Yeah, you can get all that information. And I know there are plans for one in the New York area, and there's a third one that is being built. I don't think that they announced the location yet, and I could be wrong on that.
Very cool. We'll have to dig in on that. We'll see if we can get them on. Um, okay, we digress. Earnings, but you're bringing up the strength of the economy. And stocks can bear it. We are at the start of earnings season, and so far it seems like some of the reports coming out are exceeding expectations.
I haven't been following that closely, Matt. Yeah, I've been really kind of stuck in a little bit of the macro story, especially what's going on in the Middle East, and I'm spending an inordinate amount of
Well,
time giving myself headline fatigue from that, when I should probably be putting a little bit more of a noise cancellation policy on it, because the bond market told us that it doesn't really bothered by this event over there. So I want to make sure that I'm focusing on the things that the market's focusing on. And I've kind of been a little bit wrong footed. And maybe that's why I missed a lot of the earnings headlines.
yeah.
But the tape seems to be reacting. I know Bank of America and Goldman just
Yeah,
reported.
I mean,
Bank of
the
America was up
early
today.
financials out, looking pretty good. Well, no blow-ups, let's put it that way. No, like,
Yeah.
except, um, Jamie Dimon somewhere, saying that this is maybe the most dangerous time that any of us have been in. So that the fact that you have headline fatigue, I think you speak for all of us, when everyone's trying to keep a handle on what's going on, and so difficult. And you're right, the markets for now are, sort of putting it off to the side, but I think everyone's got a worried eye on that. By the way, we are going to, as I've been, giving you guys a heads up on, we are going to be releasing Raoul caught up with D. Smith for a really long, interesting conversation, and I am talking to Peter Zahan tomorrow at 11 o'clock Eastern, I believe, live. Yeah, so that should be interesting. So roll up if you can with your questions. Otherwise, send them to me, DM me on the platform, uh, and I will try to look over them and put them to him ahead of time. Because there's an awful lot to discuss on that front. So I wanted to circle back. You were talking about some of the other issue for the bond market, and it's so important right now because bonds are really leading a lot of what happens, across the other assets. And we're talking about the economy, we're talking about earnings, which are super important. But as you mentioned, everyone also trying to figure in this supply issue. And we've seen at times the bond market kind of decoupling from what's going on in the economy and really struggling to digest all this issuance that's coming and a pipeline of it, that just stretches till who knows when, with so much debt that has to be underwritten. Andres talked about this in his latest Steno Signals update that just dropped on our platform, at digging into sort of that issue of supply. Let's have a listen and we'll talk on the other side.
If you look at the marketable Treasury issuance for the fourth quarter using the so-called TBAC Q4 recommendations, we'll move to basically uncharted territory for the issuance of US Treasuries. I know it's relatively old news. We already got the confirmation of that after the summer. But still, it seems like the market rates will continue to react to this story. Since right now we struggle to find buyers for bonds simply. There is a reason why all banks try to say to clients, buy bonds, buy bonds, buy bonds. It's because they want someone to buy them. And right now, I struggle to see who are the net buyers outside of U.S. households. Maybe a few hedge funds included in that number, but it simply means that households currently carry the back in the fixed income space, and it's basically sad to watch, in my opinion. So I basically consider the current ongoing events as triggers for renewed turbulence in fixed income space. I'm not sure that we've seen the highs yet in long bond yields in the US, given that we simply lack the bias outside of US households.
Andres also talks about what his thoughts on the timing of this recession, if we're going to get it, when we're going to get it, and his outlook for energy. As you know, he's been super focused on that again as we head into winter in Europe. You can see that full episode on our website. If you are not a member, go to realvision.com and sign up. You can just look in our chats for some of the links and trial deals that we have for you. So Tony, how are you thinking about this massive amount of supply that needs to be digested? Is it going to continue to put upward pressure on Treasury yields?
Yeah, I believe so. I love the way Andreas framed it, as a definite, kind of bidless scenario for the bond market. In fact, we know the data has shown that we're seeing huge foreign selling of bond market, of U.S. Treasury bonds. We're talking about it really, really calmly, but this is the biggest bear market in bond market history, right? We saw bonds off, broadly speaking, 7% in 2021, right after the Fed doubled their balance sheet. Shocker, who would have guessed that, right? We saw them off another 22% 2 years after the Fed balance sheet was doubled. Shocker, who would have ever thought that? And we see them down 10% this year for the third consecutive negative, 3 years negative in a row. And I don't think that's even ever happened. Or if it happened, I don't think the magnitude has been this bad. And boy, what a shocker that something like that would happen after the Fed doubled their balance sheet in one print, and that's something that just never gets tied together. That's kind of frustrating for us, smaller market guys and independent analysts when, like that's a post-it that I've had on my board for 3 years now. Like, don't forget the Fed doubled their balance sheet in one print. And so what that's going to mean is inflation should run rampant and bonds should get slaughtered, right? So we're in the middle of that. Where she stops, nobody knows. I would not stand in the way of this. It's been, we had bonds for years of, people that have been in the markets for a while, because it wasn't that long ago. But you remember, Maggie, we had rates pinned in negative territory overseas, pinned at zero here for a long time. What is that? That's holding a beach ball underwater, right? It's very unnatural. And when the beach ball finally lets up, you don't want to be the one to limit how high the beach ball is going to go if you're a trend follower, right? So if you talk to guys like me, I get a little bit hysterical about the bond market and think terminally about it. I could see 10-year yields go to 10%, over time as inflation just persists and has periods of hyperventilating and getting terrible and then calming down again. I kind of feel like that's the scenario we're in for. So I remain a bond bear under these conditions where it's kind of technically broken with good reason and going lower. So that's how I kind of look at that, broadly speaking, and that, kind of the nuance on that changes from day to day and how it affects other things. But very much right now, the bond market is in charge and I listen to everything it has to tell me.
Yeah. Yeah. And this is the big change, right? We would always, especially in the US, we're very equity centric, but this is when bonds and then to a certain extent, currencies, you really have to understand what's happening there, because bonds are in the driver's seat right now. And fantastic observations you just made there. And by the way, we're going into an election period. So the idea that there would be any restraint or fiscal restraint or efforts to try to work down the deficit seem very unlikely. And we have a Congress that's non-functional right now. I mean, we're still trying to elect a Speaker of the House. I think that political turmoil would be more frightening to people if we didn't have all the headlines of a war impending, potential, very, very a war in the Middle East that has potential to spread, or many people worried about that. You might be getting more attention. We're hearing about the speaker trials and tribulations, but it seems like Washington's been broken for so long that people aren't paying attention to it. But I mean, we're not operating right now. So all of this not good for a situation where these high deficits are starting to have real market impacts.
It does feel like risk, the way I interpret what you're saying is, to me, it feels like risk is kind of underpriced in a couple of different areas. I still think the oil market risk in the oil market is upside risk is dramatically underpriced, even though oil volatility has expanded, to reflect that. In fact, it's just about doubled now, oil volatility from the teens to the high 30s. And now, price is kind of backed off the highs. It's back in motion here with the conflict in the Middle East, trading around 87. But it just seems to me like it's one headline away from being 95 bid and running again, given what's gone on in the Middle East and how things are. I don't know. I could be wrong because I am not a political analyst or a biologist, so I really have no idea what I'm talking about. But this seems a little bit different to me, and a little bit more. I don't know. It seems like the world is a little bit on a more precarious position because people are saying, yeah, the Middle East has been going on for years, but not with the U.S. in such a weak position that we're in now. Right? We've got a weak leadership position, that's being broadcast around the world. We've got strategic petroleum reserve down to, tumbleweeds, and, the military has gone, LGBTQ. So it feels like we're extremely vulnerable while the Middle East is, and I think other nations are taking the opportunity to express their views, kind of knowing that there's not going to be an aircraft carrier in their backyard.
Mm.
that's going to be firing any missiles. And even though we're moving aircraft carriers around the world right now, I am shocked that the bond market is saying, really, I care about the inflation problem.
Yeah. Well,
So,
and we have still a ground war in Europe that
yeah,
is, like that's still happening. I have no
exactly.
idea how I'm going to squeeze all this in with this conversation with Peter Zaha, by the way. Like the list of things to discuss is so long. I'm
You
just
better
giving a
have your head on a
caveat right now.
swivel.
We're not even going to get through it all, but let's get to some questions here. And this one's related to oil. And this is another one. This is barely even making it punching through the noise. But Paul, thank you for bringing this up. What will be the impact of the sanctions being lifted from Venezuela?
It's going to be, a kind of attempt at a lower oil price, right? This is another political move by the administration where rather than asking ExxonMobil to pump more, he's going to our enemies and saying, can we possibly enrich you a little bit by having you pump more and pay you money for that, and we'll try to have that affect our, election coming up, and we'll try to use that to get the gas market lower and whatever they're going to try to do. But I mean, it's patently obvious, it's kind of the administration is wearing that on their sleeve. I don't think that they're trying to hide the fact that it is a blatant attempt to stop gas prices from going berserk into the election. You know what I mean? They're just trying to keep pressure off of that hot button item if they can, because they're going to have enough hot button items to deal with as it is. I don't even want to go into them, starting with migration, et cetera, but there's going to be a lot for that administration to deal with heading into um, the next election, which may be why we're going to war. Who knows?
Yeah. There is no shortage of I don't want to call them conspiracy theories, but I mean,
Oh no, it's
there's
all valid speculation at this
okay,
point.
valid
There's no
speculation.
such
Well,
thing as conspiracy. All because we know that there are actual conspiracies going on. So let's throw the theory part out the window
okay,
and
there
go
you go.
with constructive speculation. Yeah.
Constructive speculation. Um, by the way, we'll dig in and on that. Maybe good to talk in terms of actual oil infrastructure and implications with Venezuela, because there's been massive underinvestment in their ability to pump oil because of the dire economic straits that country has been in. So all politics aside, the actual logistics of getting more oil out of there have been questions raised about that for years. I can only imagine they've gotten worse. I haven't spoken to anybody about it recently, but so that's a whole nother thing, Paul, also to take into consideration. There's the lifting
And
of sanctions, and then there's the reality of actually, getting that underinvestment back up to speed. That's a
let
longer process, I think.
yeah, but let's consider, the market's view on it. The market traded from 88 to 86 and back to 87 on that headline. So
Yeah,
the market, in my opinion, is, in process of shrugging at it.
yeah,
So
right. For
we'll see
all
how
of
it goes.
those, probably for all of those reasons. So this one is from Follow the Science. Love to hear your opinion on coal today, Tony. Massive buybacks.
Yeah, I mean, it's a sector that is gonna, to me, it's kind of a fade the ESG movement sector. And I just wanted to get a BTU chart up here in front of me. When I look at coal, I see that it's had a massive pullback over the summer. With the energy pullback, it's getting back on its feet here. In my opinion, like a stock like that has gone blue sky trading, where it is a name that's in an uptrend that dips within that trend to the moving averages, maybe trades through them, and then trades back up above all the moving averages and resumes the trend. That's what it looks like is going on to me in the coal markets. I think it kind of rhymes with what's going on in the oil and uranium markets, like, the alternative energy to the ESG movement, which is falling apart. Alternative energy stocks are getting slaughtered. Solar stocks are down 50% on the year, about to go down another 50 or 100%. I mean, the whole trajectory, I think the world is going back toward big boy energy consumption and big boy baseload power. And I think coal is absolutely going to have, a say in that more stable energy providing environment, or sort of less risky energy providing environment, where
Mm.
you're not going to sit around and wait for, the price of natural gas to come back, right? You're going to pivot and let's go to coal and let's go to other options that are cheaper and fossil fuels. So I can easily stay constructive on that sector. I've kind of been uh, a, an uneducated bull in the background. Like we covered the stocks really closely when I was at Dahlman Rose years and years ago, and I
Mm.
kind of lost touch with that. And because I lost touch with that, I kind of feel like I lost touch with the sector, but I can analyze it on the fly and
Yeah.
keep an eye on it and know that that's kind of the backdrop of what's happening.
Yeah. I think it might be good. I think it might be good for us to get sort of a a deeper dive on energy and a bit of a roundtable and catch up on all that because we're getting
Great
some really good
call.
questions here, right? I think that'd be. I think we'll try to get that rolled up, people. We did a poll. I didn't even talk about this, but on our YouTube for our YouTube folks, we did a poll, sort of asking the same question we started at the top of the show: Will the U.S. see a recession? 75% of you said yes. Only 25% said no, uh, which is interesting. And I think it's probably a reflection of how we feel. So I'm going to give a nod. I don't know when the next time Brent Donnelly's on with us. Brent writes a great note every day at Spectra. And he wrote some really, really interesting things about sentiment, just sort of pondering aloud whether we're, all suffering from a sort of societal pessimism that we feel terrible. And there's definitely culture crisis going on, but that doesn't necessarily mean the actual weakness is there. I'm doing a terrible job paraphrasing it. It was really, really eloquently put. I'm gonna see if he'll give me permission to share a little bit of it. I'm definitely gonna dive into that next time he's on. But that's interesting. Like how you feel. Is that a reflection of what's really going on in the economy? I think that's been tripping some people up,
Yeah,
for sure.
absolutely. Yeah, I agree, Maggie. I think that that's a very a widespread thing because there are a lot of things going on in our country that make you feel bad,
Yeah.
right? That make you a little bit angry, right? Our culture is under attack in a number of different ways that we don't need to go into, but like you feel really horrible about that, and you feel like that translates into economic weakness, people losing their jobs, et cetera, et cetera. Then you get on a plane, you go to Las Vegas, and you're like, oh my God, it's a 20-minute wait for an Uber at 3 o'clock in the afternoon to go 5 miles. You're like, this is crazy.
I thought you were
So
going to say 3 in the morning since you were in Vegas, but probably
I still
2.
didn't see 3 in the morning at my age, Maggie. Got close, but didn't see three.
I know it's so hard. By the way, although not well, that's what they have some time on. I was going to say, Travis Kelsey and Taylor Swift managed to do it this weekend, but they're youngsters. By the way, the very robust conversation happening about you two on the platform, and Ralph is a big fan and says referring to you two as merely rock and roll is an insult. They are performance artists, and Bono is a poet. Thank you, Ralph. I think that a lot of people might feel you on that. So now we know Ralph's a big U2 fan.
You gotta be. You gotta be. U2 is a really weird band for me because they're the one band that I don't particularly love any individual in that band at all, and I absolutely love their music, and I live for their concerts.
Yeah, they give epic concerts.
Yeah.
Um, so and it's funny, these concerts are getting bigger and more involved, and because that's where the money is, right? So it's and people are willing to spend it, as we saw from Beyonce and Taylor Swift. They're moving the economic needle too. Okay, wait, let's rifle through a few of these. We only got a couple minutes. Let's see.
Go.
AJ, what would make you bearish on equities?
A big dislocation in the bond market,
Mm.
right? A big dislocation lower in the bond market. It's really hard to imagine what is going to do that from this level, right? So we've been
When
selling
you
off
say
for
lower,
three.
you mean lower price, higher yield?
Yeah,
Yeah,
like like where the bond market is kind of falling apart and then it starts falling apart,
yeah,
right? Like something like a high volatility bond move lower. That's about it. And I feel like that's kind of a low probability event. And I hope I'm not mispricing that risk. But
right.
we just saw inflation tick higher last week. That didn't really phase the bond market that much. It was still selling off. Like we've kind of been in this very controlled move lower. And that to me, like I said, as long as the economy doesn't just come apart under our noses, the stock market can bear that. But I would get bearish if there was like, a consecutive dislocation, like a rate skip to higher levels on a headline, that nobody was expecting. It's a little bit down to that, because like we've seen, the stock market's more resilient than people think.
Yeah.
And as long as we still have this sort of new religion in AI and a lot of pressure underpinning the natural resources markets with, a changing geopolitical landscape, and all the negative sentiment, that's a recipe for stocks to march higher.
Yeah. Um, and if you saw that big dislocation in bonds, that means things are breaking, right? So we have things to worry about if you start seeing that.
Yeah, Yeah, I think that would spike volatility like that, along with the steepening of the curve, back
Mhm.
towards towards the zero boundary. The VIX would spike alongside that, and the stock market would have to sort that out. That may throw a scare into me, but I still would probably be looking to trade a spike lower from the long side under the conditions that I always do. So there you have it.
Last one is uranium. We have Doug and Trillion both asking about uranium. Is this the next leg up in uranium stocks? How far can it go?
You gotta go with it. If it looks and feels and smells and sounds like an actual breakout on larger magnitude moves, it's checking all the boxes. Technically, it's holding where it should. We're getting good news out of the biggest producers and things like that. The price of uranium is going higher. It's kind of all adding up to be another successful fade the ESG movement fade the ESG movement trade,
Mm.
as the supply continues to tighten. We're kind of right now, like Cubby's the leader in the sector. It's his trade, and probably some other guys that have been a little bit ahead of him, but he kind of attacked it the right way. And we're in like an inventory vacuum now, where the utilities, if they want to keep their utilities running on nuclear, they're going to have to go out and buy the uranium on the offered price. And that's generally what utilities do.
Mhm.
Right. They talk the game in all of their reports and say, we're trying to restrain from paying up for, our uranium here. And then it comes to, okay, do you want to turn the reactor off? And they say, okay, please pay the offer for the uranium. Right. That's how it happens. So we're going to have to drive slowly through this, but it feels like the weak side is still to the upside. And I don't think that many people have piled into this sector, especially on the institutional side, that make it like overcrowded yet or anything like
Yeah.
that. So that's one thing that I still favor.
All right. That's good stuff. Fantastic, Tony. Thanks so much. Love having you on. Love getting your thoughts. A lot of
Yeah,
stuff going on in the market. So appreciate your insight.
that was great. And we injected a little YouTube, like real life conversation into it.
There you
Maggie,
go.
great
We got
job.
got it
Absolutely
all.
brilliant.
Exactly. Exactly. And this soon we'll be spinning tunes.
Top
Um,
class.
Hey everyone, as you know from the Festival of Learning, the Ledger Quest is still happening. It's gonna give you all the fun way to get all the foundational knowledge that you're gonna need about the next digital asset wave. It's open for 17 days, so it is still open. 100 of you who pass the quest will win a custom RV branded Ledger device. There's info on the screen how you can still do that, and all of the programming from the Festival of Learning is now on our platform. And there were really, really mind blowing conversations. And it's not just for people into crypto and digital, really interesting branding. This is just like people are looking into the future and trying to identify the next big unicorn or the company that's going to sort of kill this next move. And be that sort of next big internet type company, but this time in digital assets. So really, really worth a listen. And have fun with the quest. That's it from us today. We'll be back with you tomorrow. Thanks, everybody. Take care and good luck out there. Thanks for joining us, everyone. Today's Real Vision Daily Briefing is sponsored by Crane Shares. Learn about their KCCA ETF at craneshares.com/KCCA/Real Vision.